And we now have joining us in a CNBC exclusive, Edgewell Personal Care CEO, Rod Little. Rod, thanks for joining us today.
Good morning. Thanks for having me.
So what do you see as the key factor driving the beat here? And what's your outlook for consumer demand? Are people going to keep buying? If they're traveling more, they're going to be buying more sunscreen?
Yeah, Julia, they have been. The consumer's been resilient. We've been talking about that all year. I think there's a projection that the consumer is going to come under pressure at some point here in the near future. We haven't seen that to this point. The consumer has been resilient. I think you've heard others say that. That's certainly what we have seen. We have broad-based strength across our portfolio. That's what's driving our results. We have a grooming business that we acquired over the last couple of years. It didn't exist in our portfolio. Brands like Cremo, Jack Black, Bulldog, that's now approaching 10% of our portfolio next year, growing double digits, 13% in the quarter. Banana Boat, Hawaiian Tropics grew 13% in the quarter. And increasingly, we're seeing strength outside the United States. So we grew 2% in the quarter in the United States, 2.3. We grew almost 9% outside the United States. So we're seeing actually consumer demand accelerate in our categories outside of the United States.
I know there's some commentary on Japan going maskless in the quarter, meaning men are going to have to buy more razors to shave there. But curious in terms of the outlook, in terms of all this conversation about inflation, rising commodity prices, how are you doing in terms of this price elasticity that we just discussed with Kellogg at the end of the last hour?
Yeah, the price elasticity commentary that I picked up there, very consistent with us. We have some categories where we've priced up and we've not seen any meaningful fall off in volume or demand for our products. Categories like fem care, our grooming categories, sun care, all very low elasticity. Where we're starting to see a little bit of elasticity is in shaving. It's still a very competitive category. And as we've raised price a couple of times over the last couple of years, we've seen some small elasticity increases. And I think that's the category where we're seeing the biggest differential between price and volume. We have volume and price growth in almost every category. And right now in shaving, it's primarily price-driven growth over volume.
Yeah, not every consumer company can say that. I am curious about, we've been watching some marginal degradation in travel intent, and I wonder what the correlation is between travel and some of the sun care units.
Yeah, well, I just came back from a vacation to Greece, and the planes were full, the beaches were full, and sun care usage was up. You saw it. So when people travel, they typically travel to water. When people travel to water, our brands win. We have occasion-based brands, the leading brands here in the U.S., Banana Boat and Hawaiian Tropic. And so we're up double digits in the quarter in the U.S. in sun care. Outside the U.S., we were up over 20%, as you are seeing a global return to travel and people going to resort destinations, which drives our sales. So the reopening, which is now a couple of years into it, we seeing is continuing in addition to a lifestyle change where people are spending more focus on preserving their skin. Sun damage is the #1 driver of aging of skin. And so there's just an awareness and a usage of sunscreen at a level that's higher than it was before the pandemic. And we think that's durable.
Yeah, this generation gets that in ways that prior ones arguably didn't. I wonder how you're thinking about the ad market and whether or not now's the time to sort of step on the gas and whether or not AI is allowing you to target better, especially in shave.
Yeah, it is the time, I think, to step on the gas, depending on the category and the country that you're in. We look at category country combinations before we choose to invest. And so we're leaning in some markets, we're pulling back in some others. For example, in sun care, at some point you run out of product to sell, and so it's pointless to lean on the gas in that case. We're leveraging AI not only for productivity, but also thinking about how we look at data and analytics, do better targeting. We can now do that. And also the creative process is becoming faster with some of the new AI tools coming on board in terms of the content that we serve up, as well as the personalization of the content we can serve up and offer. And so it doesn't mean actually that you're going to have to spend more. There's an efficiency as we look at digital and using AI, but certainly it's becoming more micro as we look at who we target and what we serve them.